lighting people, private equity is a topic that we talk about in the lighting industry when we learn that a PE firm has acquired a lighting company, or a PE firm sells a portfolio company that is a lighting company, or when, like happened in recent weeks, a private equity company decides to just shut down a lighting company that it owns. But we have to be careful not to paint the same broad brush and generalities to every PE firm. So I invited Geoff Ling, who's the managing director of Merrimack Group, a boutique M&A advisory firm, to talk about how big of an impact private equity has on the lighting industry and how we should evaluate these deals as industry people or stakeholders or customers or employees. So we're pleased to be joined today by Geoff. Geoff, hello, and thank you for joining us today for 5 Big Questions.
Thank you, Alan. My pleasure.
Geoff, so glad you're here. And PE is a topic that comes up from time to time, but it's really been a topic that a lot of lighting people are discussing recently. Tell me, when we look at M&A activity in the lighting industry, how pervasive is PE activity, private equity activity, in relation to M&A activity?
Yeah, so of the deals that we track, which is pretty much every manufacturing and software company in the lighting industry, over the last 5 years, it's been about 40% of deals have been consummated by a private equity firm. So, and that's been a big change over the decades. It's become a lot more, I'd say the focus has shifted more from strategics to private equity. So they're definitely a bigger force. We're actually marketing a company right now where about 75% of the buyers are private equity, and it kind of depends on the deal. In this particular case, they have, it's a company that's kind of its own niche. So there's not a ton of obvious strategic buyers, but there's plenty of private equity interest.
And just to clarify, so a strategic buyer would be like one big lighting company buying a smaller lighting company. That's one example of a strategic buyer.
Exactly, right.
And then, of course, private equity is oftentimes not involved in that. But it's also to be noted that one of the biggest private equity ownerships of a lighting company is Current, and American Industrial Partners. They're a huge company that keeps a lot of their portfolio companies for many years. Whereas sometimes we see these smaller lighting companies get bought 1 year and then sold maybe 18 months, 24 months later. So lots of different activities there. And if you're on the sell side, if you're a smaller lighting company, or it doesn't have to be small, if you're selling a lighting company and you're getting interest from various buyers, Geoff, which route should one go? The strategic buyer route, the PE route, or whoever writes the biggest check?
Yeah, well, obviously the economics is probably the most important thing that people look at. But if you're a seller and you have a choice between 2 comparable offers between a strategic and a financial buyer, most people have I would say private equity historically has earned a bit of a kind of a dubious reputation, which I think in most cases is not deserved, because most of them are pretty good. But putting that aside, I think the main difference between private equity and strategic buyers is that private equity buyers generally like the management team and the owner to stick around for a while, preferably about 5 years after the acquisition. Frankly, partly because they've learned that having management continuity is important, but also they want to have someone who's have a sort of an orderly transition period. So if you're relatively young and you want to kind of be involved in the company, you want to take the chips off the table, but also retain some equity, then private equity is actually a pretty good way to go, because you can, obviously you diversify your personal net worth, but also you have some, the second bite of the apple, which can be more meaningful.
No, that makes sense, and good insights with that as well. And when you consider the PE firms and what their motivations often are when they're considering to acquire a lighting company or any company, do they want to just buy the company so that they can sell the assets, sell the parts for more possibly, and shut that company down? Do they want to flip that property and just sell it as a whole, but make some money on it after 1-2 years? Or do they truly try to invest in long-term growth of that company they acquire? What's the PE mindset?
Yeah, so great question. So first of all, the holding period does vary quite a bit, I'd say, but on average, I'd say most private equity firms have a kind of a stereotypical 5-year holding period. That can, for most firms, that ranges from 3 years to 7, but right around 5. And it kind of depends on. So I'd say the vast majority of companies, though, probably 98%, are looking to grow. They have capital to deploy, and they want to kind of obviously earn return. They are financial guys, obviously. So they want to kind of put the money to work but they do by their funds. Generally, they're required to sell after 10 years max for the life of the fund. So yeah, they want to grow it. I'd say there's probably maybe 2% of private equity firms that are distressed investors that go after situations where that are losing money basically, and they try to figure out what to do with it after they bought it. And in those cases, they can be much shorter holding horizons. But I'd say typically 3 to 7 is more typical.
Okay, that's good. That's actually longer than I would have guessed, and that's a good summary on that. And I think, Geoff, the reason I called you probably a couple weeks ago now to start talking about some of these things is because there was a major headline news story that happened last month in March of 2023. You're not connected with any of it. You don't know you weren't involved in any of the business dealings that happened. But obviously, Universal Lighting Technologies, part of Universal Douglas, that whole company shut down. It was PE owned. And it caused some people, I think, in the lighting industry to say, man, that was so sudden. And those, the hundreds of people just lost their jobs and customers got burned. They're holding orders. Those projects that are being held up for control systems that will now have to face some challenges to figure things out. And people are saying, like, I'll never do business with another PE owned firm again. And I don't think that's the right strategy. I don't think we can look at one really unfortunate or maybe bad situation and kind of paint a broad brush across any private equity owned company, because I think there's lots of really good well-run companies that do things the right way. And wanted to get your thoughts on that. How should a customer, how should an employee assess things when that company they're working for or doing business with is now owned by PE?
Yeah, well, first of all, I would say that people are understandably very, when there's any terms of change of ownership, people, it's obviously change can happen at that point post-closing. I would say in the vast majority of cases, people get overly concerned about it because in the vast majority of situations, it turns out to be a good thing for the company and the employees and everyone and customers. But clearly there are cases where you have companies that are looking to, private equity firms that are, do shut things down. And so there are actually some, to me, it's kind of obvious actually, if you know the red flags to look for. So there are a number of things that I would look at if I were an employee of a company. The first thing you could do is look at the private equity firm's website and get a sense for what kind of PE firm they are. And they don't hide it. If they're if they have words like, we're a distressed investor, we look for special situations, we're okay with negative EBITDA, which means they're losing money. If they talk about turnarounds, any of that language, then that's a pretty good sign. It's a company that's looking for struggling companies that they can buy, frankly, the pennies on the dollar typically. And so that's one red flag. The other red flag is if it's, and if you don't have, assuming you don't have access to the financials, if you see the companies being sort of running as if they're running out of money, that's a major red flag. So for example, if they have layoffs, obviously, or hiring freezes, if they're not paying their suppliers in a timely manner, if they're reducing inventory, cutting back on things like trade shows and advertising, those are pretty good warning signs that the company is not doing too well financially. And particularly if it's a company that's, or a business unit of a larger company, particularly public companies, they can be, they'll typically divest something and say it's non-core, non-strategic, and that's kind of code for not profitable. So those will be reasons why, so those kind of companies aren't attractive to the mainstream private equity firm, but there are several firms that specialize in just that type of situation. Frank, I would say in this market, there are fewer of them. Obviously, when there's a recession going on, they tend to be more active. But right now, it's very, very few. I'd say the vast majority, probably 98%, are more the kind of grow and build type private equity firm.
Makes sense, Geoff. And some of those things you mentioned, I really loved your insights into how customer, or what some of those warning signs are. It feels like sometimes some of those things are done just to maybe make the books look good too, to get a higher bid price on the sale of the company. But if there are massive layoffs and those other things, those are certainly some red flags. And then you've been involved. You're a longtime lighting person who's now who then became an M&A lighting person, both for a large company and now, of course, on your own. And so when you look at the market right now and into the future, what do you see? What are your thoughts?
Well, so I think from a business point of view, I think most of our, at least the clients we talk to are doing quite well this year and are fairly bullish about this year. I think from an M&A perspective, despite, overall, the sort of macro M&A market has, last year was crazy busy. Things are softening a little bit now. From our point of view, we're seeing things pretty strong. We've got a very good pipeline. And from my point of view, looking at the sort of the landscape and how it's changed over the last, 3 decades, especially with the advent of LEDs and the whole LED revolution, so many new companies have popped up. We now track about 750 companies in the US and Canada, and the median size is about 10 million revenues. So there are so it's a highly fragmented industry as a point, and we see lots of opportunity for consolidation. And of course, many other investors and firms are recognizing that too. So I predict it's going to be quite active for the foreseeable future.
That's encouraging. One thing that I guess one of the paradigms I was in was thinking about how interest rates have really just quickly gone up over the last 12 to 18 months. Is that affecting the way that buyers can finance deals? And is that possibly something that could slow things down?
Yeah, that's a great question. Certainly the buyers complain about it as a reason to maybe not bid as aggressively as they might. But at the end of the day, there's still so much private equity money out there sloshing around that if it means have to put in more equity and take a bit less debt, then so be it. And we haven't seen it yet depressing multiples, but it might maybe a little bit down the road. We'll see.
That's good news. That's promising news. And I loved hearing how there's lots of private equity money sloshing around, Geoff. It's sloshing around. It's fantastic to get those insights from you. And I always learn something when I hear you talk about lighting and private equity. So thank you for joining us today for 5 Big Questions.
Thank you, Al. My pleasure. Take care.
Hey there, we really enjoyed that discussion. We hope that you did as well. Be sure to click that big LED logo next to me, and what that'll do is subscribe you to our YouTube channel so you don't miss the next 5 Big Questions interview. And YouTube subscribers always receive an early preview to the next interview before we even post it on the Inside Lighting website. Thanks, and we'll see you next time.